From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Ladies and gentlemen, this is Adrian CMT Charter Market Technician. Some people know me as CryptoBirb. And I'm here to warmly welcome you on today's show on the Friday webinar. And there are many people coming in, which is pretty crazy. That's pretty awesome. Let me know, guys, how you are doing, where you're from, what's happening on your end. I'm pretty excited to see you. It's good to see you because you are giving yourself a chance for quoting my good friends, financial literacy, for getting all the good, reliable education, all the good materials that are here basically to get you some good insights into the markets. Let me know where you're writing from, what's happening. Germany, there's Germany. Guten Tag, right? I think it's not necessarily going to be a Guten Tag, probably because it's not morning or so. Still, it's good to see you, everybody. This is pretty exciting. Let me know, everybody. There's Mike, there's Crisito, Deepesh, there is Ron Canter, Stevie J, France, bonsoir, Romania, Michael Maguire. Hey, Mike. Good to see everybody. All the blessings to you. And, we're going to talk about altcoin picks. Well, we're going to take the list of the of some altcoins, and just maybe some of them as we go and scan are going to be good picks, for the 2024 in terms of the strength, which is going to be yet to be explained. Israel, from what I'm seeing, Alon, good to see you. And Manny, I hope you guys are staying safe out there. Vancouver, BC. There's France as well. Love seeing you guys. This is pretty exciting. Right on. So we're gonna discuss a lot of a lot of things today. I would start off with very casual stuff, and just digging in deeper into the markets, right? Because at the end of the day, what we're doing here is taking care of the financial knowledge, the one that is based on data, facts, and evidence, right? Evidence-based technical analysis is actually giving you an opportunity to be profitable, right? It's technical analysis in the real sense, in the real spectrum. Is not a set of squiggle lines. It is not resistant to market manipulations. It is not a crystal ball to predict the future. It is none of that. What it is, it gives you a toolkit to manage the risk based on techniques, based on volume, price action, breadth, momentum, time cycles, right? And you can quantify that. And the whole premise of that is that by observing the human behavior, we are, to an extent, in position to predict certain patterns. And even though it's not so much about predicting the future, it's much more about relying on the averages, on the long-term averages, on the big sample of data. And if we rely on the facts, on something that happened already on the left-hand side of the chart, we're gonna basically rely on the facts. And relying on facts is profitable. Relying on opinions and guessing the future is not profitable. Because how many times in your life have you won a lottery? How many times in your life will you win a lottery? Well, the chances are that not many times, right? And if you keep trading, keep betting your money, putting all your life savings based on a guess and an attempt to win a lottery, it's like going to win a jackpot and going all in every single day, even though the chances are not there, right? So relying on the facts is so much better than relying on opinions. And speaking of which, we're going to take a look at the charts, at the facts, right? Because the charts are quantifying the human behavior. The greater the impulse to a reaction, greater reaction we propose as traders, as investors, the greater the volatility in the markets. And also, I'd say the greater the opportunity to quantify that human behavior, right? We are full of biases. We are full of prejudice, overconfidence, or fear that tell us often to go and be loss averse when the situation is risk seeking. We need to seek risk. We are actually going to stay away from the pain. That's what happens. So good to see everybody. Lots of good messages. So let's give it a check, right? Let's give it a quick check, starting off with the quick market overview, because in order to analyze Bitcoin and altcoins, we need to understand that crypto doesn't trade in vacuum. We're talking about the big institutions stepping in. Larry Fink of BlackRock talking about Bitcoin as a flight to safety. We're talking about BlackRock's iShares, IBDC, Bitcoin spot ETFs coming to approval quite soon. All right, so there's a lot of happening that tells us to accumulate information from the traditional markets as well, especially that the correlation between Bitcoin and the traditional stock market is actually getting more and more intense. So Dow Jones Industrials is right now here, is actually breaking to new highs. Right, it's a new all-time high for Dow Jones Industrials. There is not a single situation where an all-time high is a bearish case. An all-time high is a bullish situation. It doesn't happen in the bear markets. Okay, so we broke above 35,600s or so. Now the support dictated by the 20-day moving average is somewhere close to 36,000, and we tend to anchor towards those moving averages because we don't have much other things to do, right? When we see set and anchor some data, some curve backing up our giving us any sort of like slide measure or value, we're going to anchor to it, right? Even though it makes no sense at times. So still 37,000 broken. It's a positive threshold, positive bears murdering movement that keeps persisting. It is a strong, powerful movement. Okay, the trends are up. 200-day trend is up, with defining the bull market or a bear market after a pause taken from August until November. So we are heading upwards, right? Nasdaq Composite Index is also breaking to the upside. Is also even more aggressive to the upside because the 200-day moving average is not only not been flat, it's actually rising very aggressively. All trends are moving up. This is a bullish case. S&P 500 as well, getting actually very close to the all-time highs around 4,800s. 4750s, was breached, which is quite an intense push and rally. Again, all the averages are rising, which is a good thing. German DAX Composite, quite an outside day, volatile breakout to the upside, and a little bit of a dark, not even dark like cover, potentially like a bearish engulfing setup, if you will. Closed bearish or where it is right now after several inside days or harami candle setups, if you will. All averages are pointing up. However, the 200-day is kind of like pending as a slower one. If we go to transportation, right, the disparity between the Dow Jones Transportation and Dow Jones Industrial shouldn't be big, because at the end of the day, those should travel together. John Murphy kind of like made me realize this in one of his books. However, most of the time it was so much more important, so that the averages confirm each other, and this is the premise of the Dow theory. Okay, so that the averages need to confirm each other in order to be relevant and reliable. So the Dow Jones Industrials, Dow Jones Composite, Dow Jones Transportation, Utilities, they all should somehow point in line with Dow Jones Transportation and Industrials, pointing to the upside, right, in the same direction, similar setup, which shows clearly that transportation is lagging, right, while the all-time highs have been breached on the Dow Jones Industrials. Right here on the Dow Industrials, new highs above 37,000. We're still kind of like not matched even the highs of July 2023. Still, it seems to be ramping up. There's a lot of breakaway patterns, breakaway gaps, if you will, strong gaps, strong persisting movements. So that breakaway gaps, I would say they're probably somewhere located even lower. A lot of breakaways here. This one may be potentially like much more of a measuring gap, giving you a measurement of about 50% of a movement behind, right? So if that is to be true, we're talking about 2,000 points movement to the upside, taking it somewhere close to 18,000 for Dow Jones Transportation average. If we are to compare the relative strength chart, which is fairly important, we're talking about the new highs that were breached into the XLY versus XLP, which is the risk on, risk off ratio. Okay, the new highs taken out here tells me that not only the price action, if you will, the bar chart is continuing higher. This is also additionally backed by the 200-day moving average, relative strength comparison between the price of security of XLY, the ETF of S&P 500 sector of the consumer discretionary products, the things that we want, against the things that we need, XLP consumer staples such as food, clothes, beverages, and so on. Okay, when we can afford a car, which is a durable good, consumer good, we can only do it and we can only buy the car when we feel that the future is fairly safe. We're not going to buy a lot of cars when we feel uncertain about the future, right? Because we prefer to store money and keep it, reserve it, book it for something that is more needed at that time. So all things concerned, this pressing, in the market rotation ever since 2023, this is a positive mark, really, really pushing to the upside, right? And when it's pushing to the upside, eventually tells you that there is this risk appetite growing. And when the risk appetite is growing, this encourages investors to invest more and drop more money out there of their disposable income into financial markets, making it more accelerated, it seems. The energy is stalling, which is a good thing because the cheaper energy, there's some sort of like a cap pattern, maybe head and shoulders, if you will, a little bit irregular. What matters is that we are moving lower. Okay, the 200-day moving average is not rising. It's not a bull market anymore for energy. It's actually stepping lower just a little bit. All the averages are pointing to the downside approximately, it seems, and we kind of like continue to make lower highs and lower lows, even though there is a little bit of a breakout to the upside locally. Still, what I would say is that the energy breaking to the downside is paradoxically bullish, right, for the risk assets, because the more the less expensive the energy is, the more money you have to spend on the other things that you want, such as bitcoins, for instance. Plus, it's cheaper to mine Bitcoin. Airlines. Some time ago, I was talking about the airlines. Airline index, basically how beautiful of the trend lines you got, for the 50-day average, for the 20-day average. You don't even need to draw the trend lines because the trend lines are being brought by the moving averages right there, and it's broken above the 200-day moving average with a positive crossovers all across the board. And what a positive push today on the USB 30-year treasury bond prices. Basically, USB pressing against the 200-day moving average for the first time in a very long while, since August earlier this year. Okay, with the positive 20 versus 50 moving average crossover, which confirms the short-term bullish advantage over the medium-term bulls right now. The trend is getting stronger and more steeper. That's not something that I would bet against. That's the first thing. Another thing is that after the recent stall and the decision of the FOMC to kind of like, again, not hike the rates anymore and bring in much more dovish comments for the 2024, a lot of investors that act upon the long maturity end of the yield curve, the long-term maturities for the yield and for the bonds and treasuries, they basically started pricing in the prospect of falling interest rates, of the rate cuts, which is nothing else than bullish, right? Because the rate cuts are basically talking about the quantitative easing. And if the easing comes in, it means liquidity is being put back into the market, right? The cash is flowing back into the market. There is more cash coming, right? As the government, basically, as the central bank, just purchases the bonds, exchanging it for the cash into the market, right? And the more cash, the more liquidity, the more bullish environment to grow the bull market on, if that makes sense. So all the things concerned, Reuters Commodity Research Bureau Index, it's actually right now, from what I'm seeing, is a little bit just falling for this head and shoulders pattern, if you will, and it seems to be acting pretty well upon this with a breach below. While it's so much energy focused, the gold as a precious metal is actually at 2044.90 at this very moment, up to 2.38%, which is not a bad thing at all. 6% move for the silver today. 6.4% approximately push, right? For the silver, for the continuous daily contract. So there's a lot of much more noise and randomness in the silver than it is for the gold, which is much more directional. As you can tell by the 200-day moving average representing the long-term trend, it is actually climbing higher, okay, with the bullish golden cross over, if you will. So if that is all given somehow right now to understand, I'd say that we may actually just focus right now closely in on and keep our eyes on the Bitcoin, right? Because at the end of the day, like I said, Bitcoin doesn't trade in vacuum. It trades along with the other markets. And as the popularization of computers, of the internet, came in over the decades, so did the popularity of technical analysis. And when the free market flow was brought basically all across the board, the barriers, the economic barriers were lifted off. The market started uniting and they started mixing, started correlating. And when that happened, there's a lot of dependence that what happens on the stock market presidential cycle, it actually transpires to what's happening in the Bitcoin as well, right? So let's take a quick look and have a little bit of understanding what's happening with Bitcoin. Let's take this for a chart and then open it right now in a second. There you go. By the way, if you're watching that on YouTube, if you're watching that on Twitter, good for you. And I'd love you to drop your questions. We'll be covering the altcoin picks and the altcoins taken from the exclusive Nest Club chat from the Birb Nest premium community in the first place. And when there's some time left, I'll also do my best to cover some of your points as we go in here in the chat. So drop your questions in the chat and I'll do my best to cover them as well. Okay. Otherwise, what we're looking at is the long-term Bitcoin chart. Is the long-term Bitcoin chart that is taken from since the very origins of June, July 2010, when the first Bitcoin listing came in. And Bitcoin has gone through a long story. There was a lot of ups and downs, a lot of positive and powerful movements. However, hold on, if I were to take the latest chart, I think it's going to be much more representative. Hold on. Let me just bring this one. Is it going to be this one? Yes. Okay, so let's take a look. So April 2024 is where the halving, the fourth halving, is supposed to take place. Okay, supposed to take place based on every 210,000 blocks. That rounds up to approximately 4 years. That aligns so well with the stock market presidential cycle independently, which is pretty interesting on its own. The facts of what I know is that Bitcoin always, after the halving, since the first halving in 2012, it always rallied hard to the subsequent peaks of the bull market, as in 1250 of the first powerful rally up there. The first peak all-time high was $31, then it crashed to $1.98, $2 or so. Then the first halving came in, truly, and it rallied and lifted Bitcoin prices by 90x, 9,000%. Okay, the second halving in 2016, 4 years later, brought 30x to the subsequent peak of $20,000 when the CME futures were listed for the shorts, and that marked the very peak of the bull market. Okay, so 3,000%. The COVID May that happened in 2020, brought us this third halving that subsequently rose by 700% to the peak of $65,000-$70,000. So what we know is, even though we don't know the future, okay, we know that historically, facts, not opinions. I'm not giving you my opinions. I'm giving you facts. Historically, every single time after the halving, there was positive rally. There was strong, massive rally, 9,000%, 3,000%, 700%. This is the fact. Another fact is that a moving average representing the bull market or the bear market, the long-term trend, even if we take care of closing this data, hiding this, what's left is the red curve, and the red curve represents the bull market or a bear market. The bull market when it rises, the bear market when it falls. The red curve is rising. There is not a single way to deny this. That would be just simply not true and false. Okay, so the bull market is on, and it's on basically since the line started curving up, and it's late February, early March. So the most conservative bears should have flipped bullish by the end of March, to say at least. Although the more sensitive indicators such as bear beginner pro 200-day moving average, B pro baseline, it flipped bullish in January, mid-January, ever since Bitcoin broke above $20,000 for the first time. Okay, so halving also gets us the information about that everybody who bought on the halving in the past, they are still in profit, because the Bitcoin never returned to the same halving prices, right? It never came back to the same halving prices that it rallied off, and it always brought massive rallies. So everybody who bought in Bitcoin on halving is in profit, and everybody who bought Bitcoin in halving for most of the time was in very big profit, if you will, right? That serves some very important information. And otherwise, if we take those two charts, okay, and figure out what's the current situation, then I'd say, locally, let's launch one more. There are a couple of charts, right, for Bitcoin that I use. So 10% correction, 10% retracement of the peak approximately. The volatility is rising, which is a good thing, because the volatility rising means trend is accelerating. It's getting more and more aggressive. However, it's directional. It's to the upside, right? And it backs up the rising 200-day moving average trend, the bull market. So the bull market is getting stronger overall, right? Not to mention especially the latest breakout since 32,000 all the way to 45 almost. So very strong breakouts all across the board. The momentum locally is slowing, right? The momentum locally is slowing. The 50-day moving average is right now curving down just a little bit after an overall increase, right? So we don't know where it goes. However, we see that there is some turbulence, some local sideways. That tells me that the trend is slowing at this very moment, right? Although it's still in the upper 50s for the RSI itself. The moment the volume spike was there on the local reversal, right? So it makes it a little bit credible, if you will. However, like I said, the trend is rising. So the overall trend is rising. And even if it gets down to whatever, $30,000 in amid some crazy correction, that would still maintain the long-term trend. That would be probably the blessing. If Bitcoin ever comes back to 200-day moving average again, I mean, just a matter of when, not if, because that's the nature of statistics in the markets. They always move in some cycles, and those cycles at times just move and wrap around the 200-day moving average. I would say that that's going to be quite a good buying opportunity. I'm going to definitely take care of that if that happens, if that comes in. And listen, I got a lot of things wrong. Most of the time I'm wrong about my trades that I take. So take it with a grain of salt. And the things that I'm telling you in the chart analysis and the trades that I take, those are two different things. They can be exclusive. They can be mutually exclusive. What I say, it can be bullish, and what I actually have on my position can be bearish, right? I can see a bullish chart and be outside of the market, be out of the market, be sidelined, because my trading system and the chart prospect, the forecasting, whatever, guessing the future, it's just a guess. Okay, I may always be wrong. So take it with a grain of salt. Do your own research and so on. And that's the reality. Okay, because what we are talking about, forecasting and reading the charts, none of you should be trading based on guessing the charts. None of you should be trading based on the future guesses and what we hope or what we fear, what we dream of what we want or what we don't want. That's not the way to trade and make money. Trading in crypto and trading in financial markets relies on the trading strategy. Okay, you need to have a good trading strategy rather than guessing, the future. Because guessing is one thing, making money is another thing. There isn't even a whole book chapter mentioned titled being right or making money. Those are literally two different things. If you want to be right often, you're not going to make a lot of money. If you want to make a lot of money, if you want to be profitable, you're not going to be right often. Those are two different things, and you can only pick one of them to maximize this, if you know what I mean, right? So thanks so much for your kind word, by the way. Skeezy B, thank you. Always great insights, my friend. Much love. God bless. Here's what we have. Eric Hollett. Don't miss the offer because of the simplicity. Take the opportunity to learn how to stay on trend. You don't need to fight the data to make profit. That's it. Perfectly said, Eric. Very well done. Thank you so much. And kind words. Bodgal, my friend. Kudos, Adrian, for your Crypto Trader of the Year award. Saw it on Twitter. Thank you so much. It's actually a big blessing, and I'm really feeling honest. Mike, you want a coffee, man? Oh, such a slow day today in Poland. The weather wasn't really wasn't really crazy these days. For the positive time. Most of the time when it is a Christmas time, it kind of like snows, and when it snows, it is beautiful. However, when the snow melts and the temperature is positive, it's not gonna be much of a charm left, right? So before I head back to Portugal, I'm here for the Christmas celebration with my family. Um, Good stuff. I appreciate you guys tuning in and listening. And just like Eric said, we definitely need to make sure that the simplicity is there. Simplicity of this principle of parsimony, if you will. The simpler we get the things, the more likely we're gonna make it right. And accuracy is like I said, we need to choose between being accurate and making a lot of money, because if you want to make a lot of money, you run for the big profits, and the big profits by definition don't come too often, right? When you want to see abnormal gains, you don't see abnormal gains every day of your life. There are times when the big gains come up, but they are not something to kind of like guess, right? When you imagine you leave a casino, you're in Las Vegas, you leave a casino, and there is a pile of money just laying right in front because some drunk guy just dropped it, and there's $500 million in the pocket, right in the back or whatever. So you found it. Does that make you a good trader, or you just got lucky? Did you have any way to predict that you're gonna have this pile of cash laying right in front of you to take? Of course not, because it's impossible to predict things like this, right? So what you're doing is, regardless of the ethical side of this, of course, I don't necessarily back up this situation. What I mean is, just leaving this stuff aside, is you cannot plan for the biggest anomalies to come up. However, you need to be ready to capture them when they come, right? That's the whole gist of the opportunity. If the luck comes in, if you flip a coin 10 times in a row, for instance, right? If you flip a coin 10 times in a row and it lands on the same side 10 times heads, does that make you the best coin flipper in history, or just got lucky, right? So regardless, if you got lucky, you probably should have closed on the windfall profit, because that is an anomaly. That is abnormal. This is not normal. Normal is 50-50. And the law of large numbers eventually gets you closer to these theoretical formulas, right? Because it may happen that in the short run, 10 attempts of a coin flip are basically going to show you a little bit of a deviation. And this deviation, the volatility, is getting erased and annihilated as you go towards the large numbers, right? And the large numbers give you the theoretical probabilities at the end of the day. So what I'm saying is, you need to choose whether you want to be right or make a lot of money. If you want to make a lot of money, you're not going to be right too often, because you're hunting for the big anomalies. That's what I do. That's what means trend following. That's what means not hunting for 10% gains. That's what means hunting for 100x gains, right? And you don't take profits there, because taking profits is like trying to stop a speeding truck that is coming right in front of you, right? It's just going to run you over. When you try to take profit on a very volatile and strong trend, it's just going to take you out of the market, and it's going to continue without you. And just maybe you've sold for 10% gain, while it's actually heading for a 10,000x gain, right? And this not money, not earned money, is an opportunity cost. It is a money that you could have made, and you never made it. This is an economic loss, right? So in order to capture those massive anomalies, you just raise your stop losses as you go higher. You don't take profits on that, okay? Because taking profits is like trying to stop a speeding truck with your body weight. It's just not a good deal, is it? Right? So making big money is rallying on the trends. is letting yourself be wrong quite often, because you're not hunting for being right. You're hunting for making money. Those are two different things. When you're hunting for being right, to feed your ego, to boost your feeling, okay, I got it 80% right. I'm right. I'm so right. I'm so good at guessing, right? But if something is guessable, if you can guess it easily, then it's not going to make you a lot of money, because everybody else can guess it as well, right? So all the money and the profit are going to be shared between everybody who guessed it right. So that's the gist. That's the gist, and a very, very good words, Eric. So if we get back to the Bitcoin side, right? What I mean is that, again, the momentum techniques such as RSI, it's going to help you a little bit in terms of tracking the trends, because the medium term or short-term fluctuations, there may be a little bit showing you and telling you about the future. They may have some predictive power. Still, what I'm saying is completely different from what I would trade. Okay, so take it with a grain of salt. Take this remark, take this disclaimer, and so on. So currently, I got stopped for 170K profit a couple of days ago with a breakout below 32,500 on a stop loss. So the trend is accelerating. The bull market is getting stronger. The third bull market wave. Why the third one? Well, the first one was here. The second one was flat. The third one is here with the breakout. As simple as that, right? Elliott wave practitioners would need to comply with that as well. So 200-day moving average is rising. This is representing the long-term dominant tendency trend of the market. This is not the one to be argued. People who are left still trapped in their own bias and in their own delusion, cognitive dissonance, saying that this is a bear market, basically are telling you that this very line representing the bull market of Bitcoin, this is literally the trend of Bitcoin. They're going to tell you that this line is falling, because this dominant trend is the bull market or a bear market. And if you see the difference between the 2022 and 2021, and 2023, then that's what the reality is. This was a bear market. This is not a bear market. This is a bull market. Okay, so the bull market tends to persist because it's a strong, powerful trend, often rallied and fueled by our emotional biases. So long story short, this trend is likely to continue. If it's gonna happen, after a retracement throwback to 32,000, I don't know. Right? Maybe it's gonna land somewhere over there. At one point, all I know is that the 200-day moving average serves as a support. So as we go and continue higher, who knows? Maybe $44,000 is gonna be given, and then for whatever reason, maybe there's gonna be some backlash from the SEC or so, about crypto, and it's going to be banned or whatever. You never know, right? Which is why guessing the future is almost impossible. Still, trend is locally slowing. It may continue to some slower sideways, right? Especially after this recent volatility chop. Though what cannot be denied and refuted is that the bull market is accelerating, and if it is accelerating, it tends to persist. It tends to persist because more and more people are bound to join on the bandwagon, if you will. Right? So the 200-day moving average, like I said, by the Barbicator Pro, by our proprietary custom strategy, this is the strategy that made me $500,000 in two trades in 2 months. And it is here. This is the one that took me 170,000 profit in just a month and a half on the latest one that I got closed and stopped lately. This is my private system that I use with set of indicators, right? Such as this one, such as current temper trailer and the adaptive ATR volatility. This is not a super trend, by the way. Super trend is not intelligent when you compare this with the Barbicator Pro, right? You can adjust it. Barbicator Pro, it's smart, it is intelligent, it maximizes the profit, it cuts the losses shorter, better, faster. Super trend is definitely easily outperformed by the Barbicator Pro right here. It was designed to outperform. So this 200-day moving average, this baseline, 200-day B-Pro baseline, gives you a support of $34,000 approximately right now, as a, call it fair, quote unquote, fair average, right? It sets your expectations. It anchors us a little bit so that we can perhaps erase and just focus on buying in that region whenever that happens. However, we'd have no idea to know when that happens or if that happens at all, right? What I know is the volatility is rising. The 50-day volatility trend, ATR trend, this solid curve is rising. No way to deny this. The new highs on the volatility, going for 1500 right now. Daily volatility on the 1500 basis is a good improvement ever since the lows of 2023 that were all 250, right? So 250 all the way to 1500 is quite an advance this year. The volatility is rising. The trend is getting stronger. Okay. What else? So right now the trend setup is bearish, right? The trend setup is bearish. Does that mean it's gonna go down? I have no idea. Just maybe it's not gonna go up so easily, right? It doesn't need to go down. It tells me that the trend is not bullish anymore ever since the recent breakout, okay, to the downside. So the trend, the bullishness of the trend setup right here that I was rallying from 28,500s from the 14th or 15th of October, if I'm not mistaken, it's just expired, and it expired with the breakout below 42 400, 42 500, something like this. Regardless, that I'm out of the market. I'm sidelined right now. Now the high time frame trailer is also flipped bearish, and it lasted also since the beginning of October, so more than two months or so, with a lot of whipsaws on the way. So what I'm saying is, again, I have no idea where the market goes. We may just chop around, for quite some time here until until some more decisive direction comes in after Christmas. We also have the bullish Santa Claus rally on the stock market side. My good friend Jeff Hirsch and his late father Yale Hirsch conceptualized this pattern and made it viral. The Santa Claus rally tends to extend into the first days of January as well, right? So there are several days that just empower typical casual rally for the Santa Claus period. Again, so all things concerned, I'm going to only go back into the market after we get a breakout above 43,000 and a solid breakout. We almost got this. We almost got this yesterday, right? However, it didn't really do it well enough, right? I'm talking about this part, or 2 days ago, sorry. We got a couple of just right around the resistance breakout attempts, though they faded away. They were not successful. Okay, and here we're talking about some local volatility that took us, after this FOMC decision to halt the rate hikes, with a lot of volatility on there. So the trend is not bullish as of now. It may flip and change at any time. However, system-wise, like I said, strategy-wise, I'm out of the market. My thoughts are to the upside eventually, maybe a little bit of a sideways. Like I said, maybe some local chop between 40, 45, who knows? Some local consolidation. The trend is strong and the trend is positive and rushing to the upside. So what I know, when there's a strong dominant tendency, strong trend, the market tends to rally quite fast and have some short period consolidation patterns. Now heading to the altcoins, what we are having. Bitcoin is done. So let's take a look at Solana. Okay, let's take a look at Solana. That was one of the requests from EcoByte, from our premium member, right there. Okay, so let's just take a look at Solana. And what I'm looking at while looking at Solana is that the volatility is rising, that the bull market is confirmed, that a massive surge and rally is accelerating as well. New highs are being made, which is a good thing, right? And Solana is getting hotter, if you will, right? So it's not only bullish, it's only getting more and more bullish, it seems, this way lately, right? Some local consolidation, some yearly consolidation was broken in late October, and it rallies very positively and strongly, and it is so much more about the 200-day baseline, again, that is telling you about the direction of the market. If you want to get to know the direction of the market, you take a look at the BPRO baseline. Okay, that's what it shows you. This is the direction of the market. You don't need to watch the Solana price action even so much, right? So this is a good thing. And if I were to hunt for some long-term entries, I would probably go for again 40s 50s if I ever get across 40s 50s region for Solana. Maybe it's gonna be mid 50s, maybe it's gonna be low 50s. If I get around a situation like this, maybe in February, which is typically not the strongest one on the traditional stock market as well. If I get a situation to buy Solana closer to 40, 50, like I said, probably I would consider doing this. Overall, the chart is looking fairly okay. It's getting more and more aggressive, accelerating. The volatility has risen since the 1st of November on average by almost 3x, okay, by almost 300%. So that's a strong positive growth, positive spike on the breakout. This is a confirmed breakout, and it's broken out Solana into the new bull market. That's what it is. Okay. Now the next coin is AVAX. AVAX. Let's take a look at the AVAX. Did we have AVAX? Hold on. Let's make a copy AVAX. By the way, when you're watching that on YouTube, make sure you hit the subscribe button, smash the notification bells as well, so that you stay notified anytime we put together a new video just like this, or even better, by so many smarter people that we have on our team. Way smarter than I could ever be. They're incredible people. Let's take a look at Binance. By the way, we're official partners with Binance, so take it also into consideration. Full disclosure. AVAX. Okay, so volatility is rising. That's what I can tell. Let me put together again. Let me just perhaps save it, refresh the chart, so it's gonna show up. Right on. The 200-day moving average is also rising by the BPRO baseline. Right, those are the terms that I mean. So the volatility is rising. The trend is getting more and more aggressive, which is a good thing. Strong volatile vertical move almost. Right, off 850s approximately to 40. That's a powerful growth, ladies and gentlemen. Right, so it's a good growth, and I would never in my life ever encourage anybody to short such vertical rallies of 400% in no time, in a month. Those are literally like those speeding tracks, and when you try to stop a speeding track by trying to short this, it's just gonna run you over, smash you, and go further regardless. So that's the situation. Okay, a lot of altcoins are waking up, ladies and gentlemen. Let me put together quickly hopefully the one of the charts. Hold on. Let me bring it to you. One sec. This is going to be the one I was hoping to tell you about. This is a breadth chart. The breadth chart that tells you the percentage of crypto assets above the 200-day moving average, which basically has risen from 5 to 10%, if you will, 2 months ago, into 70%. So 70% of the coins, 700% growth on the 200-day moving average. The 200-day moving average breakouts happened at an increasing rate of 700% over 2 months. This is a very powerful trend, very powerful change that tells you that the whole market is moving. It's not just one coins. It's not just 1, 2 coins. It's not just 1 out of 10 coins. It's 70 out of 100 coins right now. Those are strong movements, and those strong movements tell you that it's the whole crypto market awakening. It's not just AVAX. It's not just Solana. Okay, there's a lot of altcoins that are waking up, and a lot of those are sleeping giants, if you will. Right, so we continue to move higher, into new highs, higher highs, high lows. I wanted to say there was some consolidation, although there was a bearish trend. There was a trend that was making lower highs and lower lows all the time. right? So it was a channeling in some sort of like a downtrend. Still, what matters is that we got to see this massive breakout, and this massive breakout, had only some period of consolidation and it continues to rally off. So I wouldn't ever decide to short it by any means. Okay, let's take a look at the ICP real quick. Okay, this is another request from one of our premium Discord community members. So let's take a look at the ICP. ICP. Tether. Okay. What is it telling me? It's out of those three, out of Solana and Navax, this one is looking the worst so far. Mainly because it's still in this kind of like falling tendency. It's just started curving up, which is a good thing, right? However, it's early. It's the earliest. So if I were to give you my 2 or 3 peaks out of those 2 or 3 coins, I wouldn't say that this is the one to be the premier one, the best one. Okay, we are in fact still kind of like impacted, influenced by this whatever declining channel, if you will, right? Even though there has been this nice breakout, I would still be very cautious, right? It's the earliest one, and by the momentum techniques, you want to give the best attention to the biggest runners, okay? Because this is where the strength is. Because if you can make 10x money by picking the runner or putting the same amount of money into something that doesn't move because it's underperforming, well, you're just basically missing out on a 10x rally while parking your money into something that doesn't move. That doesn't sound like a too good option, does it? Right. So it seems like a powerful, reliable trend change breakout that if I were to toss a coin, and guess, probably it's going to continue this way. Although my guess may be wrong, right? And I would so much more like to see the diagonals being broken and the diagonals. Not the diagonals, the horizontals being broken, because at the end of the day, those lines represent the critical price course and the price swing points, right? So it's on a good track, although it's early, it seems. And one final one is high. I think some of those coins I never heard of. I think so. It's DT. This one looks even worse, I'd say. Okay, this one doesn't look even too good. If I were to make my guess overall. Okay, first of all, the consolidation still seems to be fresh, right? The volatility is not so much in the rise. I mean, it is on the rise, although it's not at such an outstanding race and a pace like it did for Solana or for AVEX. Like I said, it's on the positive side of the trend, which is a good thing. It's pulling back a little bit, right? Although, like I said, it's not necessarily the biggest performer, right? So this one may be even less of a performer than the previous ones I mentioned. Okay, so like I said, price action wise, it's looking like a good candidate for some bigger runner in the future, maybe. Right now, it's just kind of like it's just getting there. It's just getting a little bit more hyped and warmed up. It is above the respective 200-day baseline, which is a good thing, right? So it's you see it's flashed and flipped from the grayish, from the bearish version, to the orange, to the bullish version, and it's above the 50-day volatility curve, which is a good thing. Although, like I said, it seems early. There's not too much strength and pressure. When there is not too much strength and pressure, I would say we need to be careful with that. Okay. Now, my good friend Rick is coming in with the algo. Let's take a look at algo. By the way, let me know real quick if you can see and hear everybody, what I'm saying and what I'm sharing here. Drop me some questions if you have them. I'll do my best to help you guys answer some of those. And as we head to algo, Okay, to Algorand. Not bad at all, it seems. Very respectful. I don't know how to say that. English is not my first language. Very reliable downward trend, some sort of like a channel. It was not so much of a what do you call that, like a very choppy and random movement. It seemed to be quite well organized for most of the time, staying below the 200-day baseline, which is what I mean by telling that it's reliable to an extent. And it's just flipped, so the tendency has changed. The breakout with the volatility is here. So the downward trend is broken, right? The downward trend is broken. The downward trend is literally the average, right? So it's like you say, it's for most of the time it was falling. For 2 years it was falling, so it's not necessarily the best candidate ever to assess this is a new bull market early. I mean, I would love to say that, and probably it is still. For if I were to pick a coin, I would so much more love to see dips on Solana and AVAX than on Algo, right? Otherwise, locally, some local consolidation pattern, if you will, some sideways period, was broken, which is a good thing. If I were to place my targets, you probably want to take the measure rule, basically, right? So you take the price range of some territory and just try to get the similar point, 66%, or not even less. Hold on. So what's that gonna be? That's gonna be 0.08. This one is gonna be 0.14. So it's like 0.7. 0.07, right? So it's gonna basically take the summer close. Yeah, so it seems that the breakout target per se has been reached already upon these levels, right? So maybe a little bit more headwinds. Who knows? We don't know that, right? What we know is that if there are some expected price changes, as in price reaching a target or so, many traders would just mechanically and magically believe that it's gonna have some special meaning, and because they believe that, even though it has no special meaning, because thousands of people literally think the same way, it may turn into self-fulfilling prophecy, and they would cluster their sell orders around that region, even if it does make no sense. Even if it does make no sense, they would still, like I said, base it on their hopes and the premises of what others may think and do. And as a result, they would cluster their orders, and it would cluster the orders in that region. This slows down the trend. It is trend inhibiting. So this those resting orders get clashed, get crossed, and then expired for getting filled, and this actually slows down the trend. So yeah, the self-fulfilling prophecy effect, maybe still there present. Although it's a good change, it seems to be starting to accelerate overall. So Algorand is quite a positive change as well, quite a positive movement since the low on the volatility in late October, right? It's pressed 350% or so. On the average side, the volatility is up 120%. Okay, so quite a positive change. What else do we've got? Have we got FTM and FET? FET. FTM. Sorry, it's gonna be FTM. Let's make a copy out of that. Phantom. Oops. Okay, so I would say it's still probably in the consolidation for what it is. Not a clearly well-defined trend, especially since it's been chopping and kind of like up and down, upturns, downturns. It's not necessarily the most reliable one, even though this breakout looks fairly similar to most of the breakouts you see in the crypto right now, and it pairs with these overall breadth conditions, those improving breadth conditions, like I said, then I referred to this one, right? A lot of coins are just above the 200-day moving average, which is a good thing overall. Still, I would say that you want to take ones that are confirmed and the ones that are broken to the upside, because at the end of the day, you've got this resistance, and you want to prefer to pick something that has no resistance and it's in the price discovery because there's no reference, it may just rally and go on and on and on and on without stopping, than have a one that serves as this anchor, as this frame of reference for people to sell, pack their set orders around this, right? You want to be on a train that doesn't stop rather than a train that has a lot of stops on the way, if you know what I mean. At least it gets you faster to the destination, to the financial destination. So it's a good candidate, although it's sluggish, it's slower. Not my best pick. Right? So all the strong picks for 2024 are the ones that are outperforming, because the outperformance by definition is supposed to continue most of the time. This is the momentum principle, okay? And the FET, USDT, Binance. What are we looking at? It doesn't seem to be too decisive, does it? Maybe just a little bit. Okay. So interestingly, the low aligned with the low of Bitcoin FTX collapse at that time, November, and Bitcoin dip at that time. More powerful rally ever since, which was pretty interesting. Some local reconsolidation, if you will, for quite some time in the summertime happened, and it seems to be well advanced, way above those regions already, and it's broken above the consecutive highs and the previous highs, the prior highs on the 2023, which is a good thing, positive. So it's rising. The trend is rising. The trend is also highest it's been since May 2022. Okay, so overall it's a good thing. Although the chart is looking fairly different. The chart is looking very much different than most of the charts up there, right? So it's on the positive side of the curve. It's much, I would say, it's within the frames. It's within the price frames, right? So you can still expect some resistance around, I guess, $1 or so. $1 or so. Who knows? Otherwise, it looks better and better. And if we were to measure the volatility again, percentage growth, just for the sake of it, then the average is up 230%, and the actual volatility between the lows and the highs locally is 500%. So it is a good candidate. It's ramping up. It's improving. Even though the chart is looking fairly different, right? It's much more of some big long-term sideways pattern rather than the actual major rally, bear market and the bull market breakout. Regardless, it's a good thing. And that expires the request from my good friend and our Evergrade student at the Birb Nest. What else have we got? Bitcoin, Ethereum, Solana, AVAX, Link. So we've got Bitcoin, Ethereum. Let's take a look at Ethereum right now. That's going to be this one, I guess. Right, so Ethereum is looking much better if you take a look at it, right? Because at the end of the day, not so much better. What I was meaning to say is that you want to obviously take. I don't compare that to Solana or AVAX, right? I'm comparing Ethereum to itself, right? That's the only thing that I mean. And this is going to be the 200-day moving average, which is a little bit flat, if you will, because if we are, let's take a look and try to add the or compare that with the Bitcoin chart. Okay. Oops. Let's take a look at the Bitcoin chart and add the 200-day moving average. Simple moving average. Smoothed simple. and we want to take it to 200. Source. Regardless, so if we take it to the daily chart, we can even hide the Bitcoin stuff, right? We can do the same for Ethereum, just for the sake of comparison. So 2023, ever since 2023 started, okay, it's actually not looking bad either. It's not looking bad either. Although the growth since the low to the high is 31%, and for Bitcoin, since the low to the high is 57%. So Bitcoin is like almost twice as strong as Ethereum, right? So that's why if I were to make my guesses, if I were to make my picks, I would so much more to prefer Bitcoin over Ethereum, right? Even though Ethereum is looking promising, but that may change at any time, right? So like I said, there's this massive big ascending triangle, if you will, pattern. Ascending triangle, by definition, generates some bullish expectations for quite some time, which is why if we measure the lows of at 880 and the highs of the pattern at 2140, this generates this actual base size of almost 1200, right? Which, if added on top of the breakout, it's going to place us somewhere into the breakout region of 3400s. That may easily be overcrossed overall to the upside, right? So what I'm saying is that just because many traders would expect the same thing, the same pattern, the same measurement rule, okay, between 880 and 2140 approximately, you can expect that some of them are going to attempt at taking the profit in fear and loss aversion, in fear that it's going to stop there, clustering their orders, clustering their sell orders. And when it clusters the sell orders, when the market actually gets there, it's going to stall for a moment to consume those resting orders. And it's actually may have this impact of a local reversal, if you will. Who knows where that happens? The 200-day moving average is moving up, even though it's been moving a little bit slower lately. It's moving up, and it's breaking out, right? There was some massive consecutive breakout over this long-term flat resistance, and you can tell that Ethereum is looking far different than most of the coins. It bottomed out in the June 2022, which is quite exotic on its own, along with the Terra Luna crash, right? It was such a long time ago, year and a half ago. So Ethereum is looking good for the long term. Is looking good for the long term. I know I have some expectations, for 3,400. For full disclosure, I think I don't own more than 7-8% of Ethereum in my long-term backs. Probably I should have a little bit more. We'll see. So that's Ethereum, and we've also got ADA Cardano, and we've got Matic and Link. So ADA, let's take a look at ADA. Do we have some ADA charts? Not really. Okay. It's not looking bad at all. It doesn't seem like it's looking bad at all. Okay. Growth of 200%. The average 50-day volatility average up 180%, and to the highs, it's actually 600%. From the lows, it's 700%. So it's a massive growth on the breakout right there. It's a massive growth on the volatility. And since the lows, like I said, 180 to 100%. So volatility has increased massively and very sharply. The volatility was very tiny right before the breakout, which tells us that there was consolidation. So the consolidation pattern was broken out to the upside. It seems it broke out all the downward trend, of course. The trend is curving up, which is a good thing. It's a promising thing. So Cardano seems to be a good candidate for a big runner. So the volatility is up 600%. That's a positive thing, and the price is only up 200%. Right? So it tells me that the volatility is getting actually much stronger than the price increase, the price appreciation. This might be a good candidate for a strong runner eventually, because this massive acceleration of the trend may not really have a lot of forgiveness or excuse to just stop for a long time and stall for the, and sideways. It's running very fast, and it's running very aggressively. It's looking good. It's looking good, I'd say. So it's a good combination for some rallies. If I were to give my some BPRO level lines, right? Some local supports are there at 0.4, 0.23, 24, of course, although it seems that there's clear sky to go. That's what it seems, right? If I were to place my guesses again, based on the targets, right? Then what is going to be this target? What's it going to be? 0.20, approximately 0.24. Let's name it 0.24. 0.24. The highs of the pattern. It's approximately, again, just take it with a grain of salt. It's likely going to be 0.44 or so. So that gives us the space of 0.2, basically base size, right? So the base size added 2.02, is right now here, basically where we are. 0.64 is the breakout target. So we reached this breakout target, right? Which is why we may see some order clustering and some stalling over here. Still, what I would say, it seems to be a good candidate for some bigger runner, even though it may pull back, throw back just a little bit. The fair price of ADA of Cardano right now is, according to the BPRO baseline, of 0.34 approximately. So if I ever get a point of 0.34, 0.40 for the purchases of Cardano, I may even scoop some Cardano bags right there. We'll see. Good shot. And one final one. Oh, sorry, two final ones. This is Matic. I think I charted Matic some time ago. Hold on. So Matic is not looking as good, right? It's kind of like, it seems to be trapped in this massive consolidation overall, right? It's a very broad consolidation. Locally, it's broken out to the upside, which is a good thing. However, the trend is not really too strong, right? It's maybe forming some sort of like a cap and handle pattern, if you will, or some double bottom. Doesn't even matter what you call that, to be honest, right? You can classify that, of course. Maybe if I were to put it in some frames, maybe it's going to be like some, Adam and Eve double bottom with a cap and handle formation, if you will. It doesn't even matter. It doesn't matter. It doesn't matter, because what matters is the base size, right? The base size of this pattern. So I didn't see it's broken up to the upside just yet. It might be a positive candidate, although the trend increase appreciation on average is not really too strong just yet, and it's refusing to break higher. It's stalling, right? So it's not necessarily the strongest candidate right here. It's moving within some choppy sideways. It's not trending up. Okay. So if it's not trending up, it's not a good performer. It's not a good outperformer. It's just stalling. So even though it's been through some nice price increase overall lately, it's not moving up. And when it's not moving up, you don't want to allocate too much portfolio to it, basically, right? You don't want to wait, park your money into something that doesn't move while everything else just moves aggressively. And final one is going to be Link. And Link, I think I've got it. Hold on. Didn't I get it? 2023. And that's going to be the last one for tonight. Link USDT. And Link seems to be a powerful move, powerful one, right? It seems to be a powerful move overall. So massive consolidation that lasted for about how long? Since May 2022 all the way until November, right? Which is where, or the late October, which is where the breakout comes in, right? So very massive, large consolidation, very sideways oriented, clear consolidation, and we're not in consolidation anymore. The trend is moving very up, now very much aggressively to the upside. New highs. The breakout pattern, the breakout was met easily. For again, if we were to place some bets on the pattern itself, right? Approximately. So what it was, 0.3, for instance, right? Doesn't even matter too much. It's 9.5, right? So what it gives us is it gives us approximately 4.2 added on top of this, right? For the breakout pattern, 4.2, it's going to be 13.7, right? 13.7 means just put it somewhere. That's supposed to be the breakout target, and this breakout target seems to be facing some auto clustering around that region. Who knows? Maybe again just this magical thinking and the overall expectations for the target to be met there, right? That causes a lot of clustering and just steers. Still, very powerful runner, clear consolidation, clean pattern, clean breakout. The volatility is slowing lately as the market just moves into sideways. Overall, I'd say you want to hold on to big runners, and this is a big runner. Okay, the big runner that took it from the lows to the highs, 250%. The average itself increased by 65%, which is a strong increase. Okay, the volatility has risen by 200-300%, which is a good thing, good increase as well. Clear pattern, the breakouts overridden. It seems that it's willing to continue eventually. Strong trends continue. Strong trends tend to continue. Marian Blog. Cześć. Czy my się przypadkiem nie znamy? Much love. I think there are some people that I used to study with, the same university. I might be wrong. Still, jak to ty, Marysia, to napisz mi tam DM jakiś. Pogadamy. Yeah, overall, thanks so much, everybody, because that's been quite a session. 1 hour and 15 minutes almost. Jesus. Sorry for dragging it for too long, everybody. This has been a while, right? I promised to deliver on the altcoin analysis, which is why I wanted to keep my promise up here. And it's pretty awesome, right? Because see, there's this, like I said, there's the whole difference between making a guess, charting things and trying to guess and just evaluate the chart. Okay, it's looking good, it's not looking good, just weed out and scan the market in a little bit. And there's a difference between making a trade based on that, right? Because I don't make trades. Even though I said that the chart is looking bullish, that doesn't mean I would take a trade. Those are two different things, okay? So I take my trades based on the strategies and the private systems that I have, right? The simple ways, to have a winning strike right there, a good winning strike, is the trend following based on the breakouts, especially the volatility breakouts, are the ones that are more reliable, the most reliable. They're the ones that are most profitable. They're not going to be right most of the time. They're going to be right 30% of the time, right? I'm right only 30% of the time about the trends that I take. 3 out of 10 trades that I take are winners. The 7 out of 10 trades I take are losers. Okay. However, because I manage my risk, because I rely on a backtested, proven, reliable strategy that the Bear Beater Pro is, I'll make money. So even though I lose 7 out of 10 times, the 3 times that are there remaining, they compensate for all the small losses that were taken, and they just return and adjust to the trend, and the trend can continue, right? You've seen the coins like the bonk or something. I don't even know what that is. I think it's pumped like 45x or something. It's crazy, right? So this is the beauty of trend following. By taking profits, by doing the opposite of trend following, you would have got out of the position so much earlier. By following the trend, you rally and accommodate and adjust in the direction of the trend, never ever just doing anything against this trend. And you just maybe you may consider yourself and give yourself a chance to rally along with this 45x trend, right? So making 45x is much better than not making 45x, if you think about that. So right on, there were some questions real quick on how to acquire the Burbicator Pro. So if you want to go to the burbness.com, this is our brand new website. And if you go under the services, right up here, there's the whole bunch of exclusive Nest Club information that you can get yourself with the 110% never lose guarantee. Basically, that means that if you follow the program for 14 days, this exclusive premium community, and if you follow this for 14 days and don't get any successful results, you're gonna get $100 return money back, or free 15-minute strategy with our team to figure out what's to be improved. This is our guarantee. That's how sure I am of the quality. Okay, not many other communities will give you guarantees like this. So take up us on this, give it a try, and it's also going to factor in the 7-day free trial for you when you check out. Okay, so it's going to come in with the 7 days checkout free trial, so you can get yourself this. Although, if you want to get access to this private strategy that makes a lot of money to me with the proof, and this is an actual full case study of the trades that I take, the trades that I took that made $500,000 in 2 months or so. You can acquire this with the website up there. If you basically want to subscribe with crypto, you're gonna get some discounts, right? We are crypto folks. We promote crypto. You're gonna get a lot of good perks and benefits up there as well. Not only the instructions, the manual, the access to the Burbicator Pro, the access to the Burbicator Pro channels. Also, you're going to get this actual how to win your confidence back with strategy that made 500K profit in 2 months. This is what I wrote, this manual guide, and it's only going to cost you $79 or less if you go with the crypto, because we love crypto. We love crypto, folks. And finally, so see, some of the stuff are paid, and it's been running since 2017, which made us earn the name of the reliable trading community trusted by thousands since 2017. And that's actually true, right? However, if you do not want to pay, you also have an option to do it. And you also have an option to join. Not only 7 days free trial, you can also join for the calls only. And you can acquire the free subscription, free VIP premium subscription to the profitable trading calls that are tested, proven, profitable, that make money, and they are good, and they are checked, and they are tracked transparently with the proven evidence and all the documented padding, if you will. And you can get it for free. And if you want to get it for free, just go to theburbners.com/calls only, right? Or go to the services and calls only, pick it up, want my signals free, and you're just going to follow the instructions in collaboration with our partners at Bybit. Because with our partners at Bybit, they're going to set you up basically for free if you deposit some cash on their account with our ref link. This is how it works, right? So you're going to get free access. That means you're not going to pay a single penny to us. The Burners is not going to charge you a single penny for that. And you're going to get access to the actual membership, right? With the Burners and the profitable calls. Right there. So no need to pay. If you don't feel like paying, you can get it there. However, if you want to get access to the courses of ours, and if you want to get your private one-on-one mentor, well, and there is still money to be paid, because well, those talented people on my team, on my crews are such great professionals, such great mentors, with multiple successful case stories for how their students did a lot of good decisions. Then that costs, right? This is a typical thing, because at the end of the day, those people deserve to get paid. Those people deserve to get money, and it's a typical thing that if you want someone to give you a part of their life, for hours and full attention, full dedication, one-on-one guidance with full instructions, full adjustment to your lifestyle and so on, then that needs to be covered. Still, like I said, if you do not feel like paying, you've got several options. You get 7 days free for the exclusive Nest Club for the community if you want to join us, or calls only, that you can basically stay and profit with our profitable trading calls as long as you wish, at no cost whatsoever. And that's actually true. So go to theburbners.com, check out all the options. You can do whatever you want. Perhaps you're not a good fit. You're not going to like what we have there. That's why we have 7 days free, and you can just decide to cancel at any time and just go. If you feel like staying, you have plenty of options to be there, to benefit, to enjoy, join this actual reliable trading community trusted by thousands. And the good thing is that as a CMT, we're actually accredited to do it, unlike all the other scammers up there. So hold on tight to your chairs. The best times are yet ahead. 2 years of the powerful rallies. And if you want to equip yourself with the right knowledge to make it, you have options to go for the payment with discounts for the crypto payments at thebourbons.com, as well as free options with a 7-day free trial or free signals for as long as you wish. That's been Adrian Zdunchik, your host, CMT Charter Market Technician. Get us more CMTs in Poland. Get us more CMTs in the region. I'm feeling lonely here as the only one holding this title. I'm feeling lonely. Go check out the CMT curriculum as well. It's definitely worth a shot. It's game-changing, life-changing. And if you want to get 7 days free trial or free signals, I'll see you inside of the Burb Nest. That's all. God bless you. I'll see you around. And bye-bye.